It has started.
Just done.
Started. Okay, thanks very much. I'll call to order the Thursday, May 8th.
Just a minute.
I do the exact same thing every meeting.
Yes, okay.
They do say yes, but then they trick you.
Give you like.
All right, thank you. I call to order the Thursday, May 8th, 2025 meeting of the Finance Committee of the Northern Education Authority. Dave Snyder, City of Falls Church Chair, and we have President Chair Randall County and Mayor.
Sorry,
And,
2 minutes late, Mr. Chair.
Mayor Davis Younger and Board Member DeFerenti from Arlington. So we have a quorum. And thanks for everyone that's participating here in person, and thanks for everyone who have used this meeting in the future. All the members of the public showing their interest. So the action item on the agenda for this evening is the approval of the draft meeting summary minutes. Sure, everyone has read them. Does anyone have any comments? I'm not seeing any comments on entertaining motion. Seconds. Any further discussion? All those in favor signify by saying aye.
I'd like to abstain. If it's okay, I think I can abstain even though I don't have to, because I wasn't here.
That's correct.
Thank you.
Motion's been made and seconded. Those in favor signify by saying aye. One abstention. That item passes unanimously. Then we turn to discussion information items. I recognize Mr. Long, your Chief Financial Officer. Mike.
Thank you. We've prepared for you this evening a economic and revenue discussion. Sheriff Snyder and I had a number of conversations, and we thought it would be beneficial for me to do a bit of a deep dive on these two topics. And I'll start off with when I went to my first economics classes a long time ago, it was referred to as the dismal science. And I thought it was because the reading was so difficult and thick, but actually it's because people only talk about economics when things are going bad. And that goes back to like the 1800s.
Otherwise you're bragging.
So on economic topics, we have obviously, we've all been watching the news, seeing the headlines. But I thought I would tailor it down to the things that as CFO, I am particularly worried about.
Okay.
And the first word that comes to mind when talking about economics is uncertainty. And I'm going to walk you through a process that's going to, I hope, give you a feeling of certainty when it comes to the authority's ability to protect its commitments to fund projects. And not only the ones you have approved, but be able to do more in the future. So global trade realignment, we went from Liberation Day to a 90-day pause. And we did that very quickly. The resources that we have to monitor the economic thoughts of the nation and even the world are pretty substantial. So Devin, I thank you for those. And the word on the street isn't that he backed off because of anything related to actual trade. It's because China owns 748 billion of US treasuries on their own books, and potentially another 1.5 trillion that is owned by them, but owned through opaque ownership structures. Japan is close to the same. Some of those, they bought them when interest rates were 1%. If you look at our portfolio, we still have some of those interest rates or items that are earning 1%. You could sell them today at a profit. And the market started to show that potentially, but nobody's proving, this is like opinion columns in the financial world. But you could look at the numbers and see that at that point in time, it looked like there was going to be a substantial number of treasuries dumped on the world market. which would have had a really terrible impact, an immediate impact on everything. So that uncertainty certainly worries me. Obviously, we're talking about tariffs. We're talking about global trade realignment. That was kind of his strategy. I think he got some pushback and people were able to communicate that. The market was starting to show it. It was one of the weirdest days I've ever seen in looking at Bloomberg. Tariff impacts, they are already impacting. You just don't feel it yet. JB Hunt, if they have the big tractor trailers, yellow sign on the side, one of the biggest trucking companies in the US. I'm using the same tool that I used with COVID lockdown. We were actually able to track the unlocking of the economy with COVID by monitoring the transportation sector. So the dismal news there is JB Hunt. And now remember, long haul truckers, there was an actual shortage of long haul truckers a couple of months ago. Not now. JB Hunt had an 8% decline in revenue month to month.
My son works for them.
I'm sorry?
My son works for them.
Oh,
For now. For now.
They
Can't come back in my basement.
this isn't good news. This is really dismal. They idled 5% of their long haul trucks. Those are the ones that have the big sleeper cabs in the back. And they have idled 15% of their short-term fleet. That's the trucks that make less than full load deliveries, kind of their version of the last mile, but it's a lot longer in life. Federal government employee reductions in force. We all know that potentially government jobs are no longer DC's cushion. That could be a fundamental change. We went through that with the Reagan administration, but Reagan switched it from the work from being done from directly hired government employees to mostly contractors. There was a balance in there. We have a recession probability.
You tell me, can you expand on that? Do you mind, Mr. Chairman?
Please go ahead.
Can you expand on what is technically a recession? And when you say probability, is that because we are technically meeting the criteria of what a recession is? Because I don't know that I know what is technically a recession.
We actually are still going strong
Okay,
economically.
okay.
But when you, and there are brighter minds than mine doing this, but when I can go into global oceanic shipping and see that there's like 30% less ships leaving or scheduled to leave China, there's going to be a disruption. It's coming. You can actually see the void coming across the ocean, the lack of traffic.
but it's 2 quarters of negative growth.
2 quarters of
Technically.
negative growth, okay.
GDP, I don't know what GDP is.
And so when you say we've had 1 quarter, no, we've had 1 month of negative growth. It's 2 quarters, which is, so it's 6 months of negative growth.
And
Okay.
actually, GDP is holding up pretty well, but the speculation is that maybe people are importing more and ordering more ahead of tariffs,
Mhm.
putting stuff in place. So there's kind of a strange bump. with
Yeah.
that.
Okay, thank you.
One of the things that really does concern me is the Federal Open Market Committee rate setting chairmanship. I mean, we basically had a stare down between Jerome Powell and the president, and the president obviously backed away. The lack of Fed independence would be really difficult for the market to absorb. This throws up so much uncertainty. The Fed did not change rates yesterday, even though the president was demanding it. And I think Jerome Powell, maybe he would have done it. Would it not look like he was conceding? Maybe he wouldn't have. Again, the data at this point is not that bad. But the forward-looking indicators are certainly kind of dark clouds. The other thing that this global trade realignment is doing is potentially weakening the dollar. And the weaker dollar obviously goes into the trade imbalance, it's actually harder to straighten out trade imbalance when your dollar is weaker. So it's kind of working against the administration's agenda. But the thing that worries me most about it is America is the gold standard. And it is the place that everybody goes to protect their assets, monetary assets, when things get tough. And that isn't happening. There is actually, you can look at our friends from Canada. You can look at our friends in South America, and there is a kind of sell America attitude out there. Meaning sell the treasuries, don't reinvest in them. And part of that is clearly political, part of that is posturing, but part of that also is the business community likes certainty. And there's very little certainty happening right now. So now, with that doom and gloom, any questions on the doom and gloom?
I do. Can you go back up to, if you don't mind, Mr. Chairman, can you go back up to E? And I apologize. I often say, this is not my love language, right? This is not what I do or what I know as well. And so when I have an opportunity to learn, I really do want to. You said something about, say what you said again about the Fed chairman, because I missed that.
I mean, it's pretty clear in his own statements on social media that the president has threatened the Fed chair's job.
And
said
he
that
can't do
could
that,
fire him.
Cobra.
I'm sorry?
Can he do that?
I don't think
I
so.
don't think so.
So
either.
many things you can't do that.
But it's one of those things that,
So are you saying that if the Fed chairman for whatever, by whatever mechanism is removed, that would be very bad?
yes,
Not just
but
because of who
also-
they are and what they believe, but because that's not supposed to happen.
if the administration were to do that, I mean, the Fed chairman is supposed to be independent.
Independent, like it's like the attorney general.
But the market's gonna drop 1,000 points in a day, at least, I believe, if he gets rid of the Fed chair.
I think
And
that,
it will keep doing that.
And that is
Multiple
because, of who this Fed chairman is, or is it because he's supposed to be independent and now we've done something that's not supposed to happen?
Supposed to be independent, and I believe that, in Argentina, when they didn't have independence, it's a nightmare for them.
Gotcha, okay.
And
thanks.
I believe that everyone in New York who has money would panic if the Fed chair was deposed somehow,
Okay,
extra legal.
okay.
and even if the president were to announce it, and this has been discussed at great length in Wall Street, if the president were to announce it, there's very little expectation that, once it got to the Supreme Court, it'd be upheld. However, it does seem to be a bit of a strategy to do what you want, and because the courts take longer to respond
Sure.
than an executive fiat.
Yeah.
Let me talk about tariffs a little bit. We know there's a 25% tariff as soon as it goes into effect on cars and car parts. The UK decision today accepted out, I think, 100,000 vehicles from the UK will be a 10%, the rest at 25%.
That was what happened.
Now, note that Japan is the largest importer, and they're facing a 25% tariff on new cars and new vehicles and new parts. So imagine your local governments buy vehicles. Construction firms buy vehicles. So you've got a major impact on vehicle costs and repairs because the parts have the tariffs on as well. That is, if they're not made in the United States. And then with regard to construction materials, I spoke with someone in the construction industry, and he said basically they're already seeing price increases that are presuming that the increases will be there as a result of tariffs. So even products made in the United States, their prices are going up because they figure their competition prices are going up. And he said pretty much anything like HVAC systems are costing more already to install. So that's relevant also to the building that goes on by our local governments. And the other area, of course, is imported construction materials like lumber. So the impacts are already starting to be felt as a result of market pressures. And unless there's major relief, you can see this, just a very actually rapid and high increase in costs.
What businesses are looking at is if they're importing something from overseas and it comes via an oceanic via ship. That ship may be on the ocean for a month. And so you have this whipsawing of the trade relationships. So they kind of have to price in some expectation of a tariff when the ship leaves the dock because it gets the tariff when it arrives. So launching from a foreign shore doesn't lock in your tariff rate when you arrive. It's a little bit easier, still ugly, but a little bit easier for a train full of lumber coming down from Canada, but
Yeah. And so I would read the good news.
So if we want to go to the sunnier side of the presentation, and there is a sunnier side, revenue and pay-go protection tools. One of the most important things to remember about the authority is our operating budget, which oftentimes is referred to as regional revenue fund, but we actually label it different for accounting purposes. But when you look at these factors from your county or city, you also are looking at it within the context of what it takes for you to operate your county or city. So you've got public safety, human services, libraries, some contribution to schools, et cetera, et cetera. So the impact there is spread throughout everything you do, as Chair Snyder had mentioned earlier. The authority is different. On an operating budget basis, the operating budget for the authority is 1% of the revenue received each year. I'm going to go through some of the backstops that we have. The first priority, and this has been, I'm the first CFO, and this has been the first priority from the first day from a financial perspective for the authority. And prior finance committees and the authority itself have validated this over the years, which puts us in this position of, I think, being able to not relax, but feel confident about the authority's financial future. Our priority is to make sure that when a project requests the dollar that it's entitled to, that it's there. And it's there quickly in a reasonable amount of time. And I think we will be able to do that. I do not see that being interrupted. So I think I'm looking down the future, even with all these headwinds, I think we have enough tools in our toolbox and enough wisdom by this finance committee and prior finance committees and prior boards to have these things in place.
Sorry to interrupt, Mr. Chairman. Is there a time bound within which we feel that level of confidence?
I think we can work it forever. The long-term consequence would be how many projects get funded in new two-year updates. Well, we can protect, I am highly confident. If it gets to the point that we can't protect the funding that's been put out there for projects, then there's bonfires in front of the building and we're worried about other things.
Okay, yeah, makes sense.
So I'll start with the first initiative that we have, and that is project delivery. The authority sent a clear message with this year's budget to focus on project delivery.
Yeah.
In less than a year, the project delivery team of 2 people has basically sorted through $109 million in project impacts. Of that $109 million, to be honest with you, some of that is moving money from category A to category B. But $76.5 million of that is money that is being freed up. And this is money that you will see an example of it tonight with the cancellation of a project, voluntary cancellation of a project. There are more of those to come. We're waiting for them to come through the pipeline. We already have the agreements. We just don't have everything signed off. That has the effect of putting $76.5 million back in PAYGO for the next round. PAYGO, when we did our first 6-year program, we did all 6 years. So that was $1.3 billion. Since then, the next 2-year update was $540 million. The next 2-year update was $624 million. And the last update was $696 million. So really, to Board Member DeFerrante's question, the next 2-year update, I had fully expected to be in excess of $700 million, but I'm not making that promise today. And we have basically a year to make that decision. The investment portfolio. We're outproducing our revenue projections by approximately $50 million a year. 1 year of that, this year's investment portfolio outproducing the revenue estimate for it can fund the authority's operating budget for 9 years. So your operating budget, unlike your concerns at home, your operating budget really is not your concern with the authority. It's making sure we have the money for the current commitments. And obviously, we want as robust a 2-year update as we can possibly do. So that's $50 million a year. Also, the Route 28 bypass withdrawal puts $95 million back into PAYGO. And it's open to the region. Consistently conservative revenue estimates to protect funding of approved projects. I talked previously about we just figured a recession was going to come. We kind of figured it was a light one, not a heavy duty one. We only valued that recession at $45 million. So we have a $45 million buffer in there that is technically in fiscal 28, but these things have a habit of not confining them to our fiscal years. So that would get spread out on us. I've talked before, and some of you may remember that we do a revenue taper. We're making a 6-year revenue estimate. We know things get really squishy in the 6th, 5th, and 4th out year, but we don't want to let squishiness get into our actual numeric estimates. So we estimate the numbers as best we can, and then we apply what we have called a taper. We just leave some of it unused. And then when we do the next 2-year update to the 6-year program, the taper that wasn't used gets pushed back into PAYGO. So it's kind of a revolving door. 2020, we were doing a 2-year update. Then Finance Committee Chair, Mayor Parrish, and I, numbers weren't looking good. Everybody, it was the same dismal science that we just went through. It wasn't bad, but to be honest with you. But we released the taper. We put the taper in the 2020 to 2020 6-year program update. We have since built it back up. So it's been reestablished. Again, that's that conservative approach and focus to ensure that once the authority has adopted a project, it's the finance team's obligation to make sure that that dollar's there when the jurisdiction needs it. The taper is worth $55 million, just so you know. Fully funding the working capital reserve. That reserve was originally designed to protect bondholders in the case that the state was late in passing its budget. Because even though our revenue is not tied to actual functions in the state, it would still be getting collected by the state. If states don't have budget, then none of these transactions are occurring, and it would stack up, behind that. In the General Assembly year of 2014 was the first time in recent memory that the state came close to the end of the fiscal year without having any budget. We kind of learned this. We also have short and long-term debt capacity of over $1 billion. I honestly think the next time that we need to finance something, to go to issue debt, we won't issue. I don't see us issuing 20, 30-year bonds, maybe a 5-year loan. And that's just the nature of the way we see our projects working and stuff. But, if we needed to get a line of credit to backstop the approved projects, it would be very easy for us to do because we have the highest possible credit rating for an entity of our type. And this is when you can take some comfort in it.
Should we ask a question, please? So I understand that statement completely. We have the highest possible credit rating for an entity of our type. What happens if what affects our credit rating, which is our localities, start seeing more issues, or if their credit rating gets impacted? Would that impact our credit rating? Okay.
And a follow-up question. What if the US credit rating gets downgraded? The United States?
More than it already has?
Yeah.
I mean,
Sorry, but
that will actually increase yield on the portfolio because of the risk factor.
yeah.
And one of the things that Deb and I are doing is we're looking at World Bank bonds because they're actually safer credits than US Treasury notes. So I'm going to kind of leave you with two things. I've got two sets of numbers. Okay?
Freezer.
Hopefully this is making you feel good.
Well, let me ask you real quick, I'm sorry, in my lack of knowledge about, when you talked about tapering and you did that way back, that affects the credit rating as well when you do that?
They look at our methodology for our revenue estimation. And it's one of the main things that the credit analysts look at.
Is that?
And we had one credit agency that didn't even talk to us when they, renewed.
Because
That's good.
Well, and part of what I heard is what they need is, well, when they pitch, who did talk to us, they had a series of questions, and I gave them that month's finance committee.
Yeah.
said, here you
And
go.
they said, well, okay.
Thank you very much.
They asked some follow-ups, you had to change your estimation process.
Yeah. I'm just curious. Okay.
I mean,
Thank you.
for me, it's a privilege, as I had told Chair Snyder, because he made it very clear he didn't want us to feel pressure as we go into this 1-year renewal of our current estimates and add 2 years of projection on it. He want to put pressure on us to make numbers. And in the portfolio, that is actually called making your numbers. And one of the things that I've always admired about the authority is the portfolio is the easiest place to suddenly make a lot of money. But you do that by taking risks. Our ability to make the money that we have in the portfolio has not been because we've been taking on extraordinary risk. As a matter of fact, we've done quite the opposite. There are things called Yankee CDs. They are issued in America under American regulations. They are not overseas financial instruments, but they are almost always issued by a bank that is set up to operate in America. We stopped buying Yankee CDs from Chinese-related banks over 2 years ago. You just look and say, we're not going to participate in that. You look at, our exposure level in different things. We dropped French banks too, a little more recently. And again, those instruments are not French instruments. They're not Chinese instruments. But we just don't want to deal even with what's called in our world headline risk. We just don't want anybody, looking at the portfolio and goes, looks like you got a bunch of Chinese names in here. And, so we have two main, I'm going to pull this together with two sets of numbers. One is what I refer to as structural capacity. And that is the taper and the working capital reserve. Combined, that's $175 million. We also have true dollars that are available to us today, even though they're not going to get assigned for another year. And that is the $76.5 million in the project delivery. It's 76.5 million. And the 95 million from the cancellation of Route 28. So that's a combined $171 billion for a total of 346 million, which is roughly half of the entire funding program. So
Yeah.
if you opted to just skip a funding program,
Right,
which is an option,
right.
you would have that as an option, but I don't see it as being necessary. I don't know what that number is going to be yet. But, and it may, I'll be honest with you, as bad as things get, it might be lower than the last time. You also have to remember that inflation for a sales tax entity, and we are called, the terminology, we are a sales tax credit. Inflation is a good thing for sales tax revenue up until the point when people stop
Stop
buying
buying stuff.
shoes so that they can afford hamburger helper.
Yeah.
I mean, I know it sounds terrible,
No, that's very
it's
true.
brutal, but inflation is good for sales tax up until that point.
They have to be hamburger helper though, okay? But yeah, that makes perfect sense. I had not thought about that. That's very.
Now, what
Yeah.
it does do to you on the expenditure side, obviously, is your projects become more expensive.
Yeah.
So that's kind of my, one last thing on the operating budget. The operating budget, because we are a very fiscally conservative organization, has a 20% operating reserve built into it already.
20%, your reserve is 20%. Wow, is 10% required?
10% is the standard.
Do you have any contingency funds built into?
Well, that's the 120 million.
So you have that, you have the operating
Plus.
reserve, the 20% and the contingency funds.
Well, yeah, that's not part of the
Yeah.
120
Yeah,
million.
I know, yeah, that's great. Okay.
We also have an equipment replacement reserve, stuff like that.
Yeah.
We did those more so that we bought all of our initial laptops at the same
See,
time.
I'm so glad we got into the space and did all the stuff we did, like the furniture and all that stuff, but, and, yeah. Yeah.
Well, and actually, remember, all of this didn't come out of the operating
I
budget.
know, I remember.
It came out of negotiation,
I remember.
different forms of landlord concessions.
Any other questions? I won't ask for concerns, we've got a lot of those, but questions.
So many concerns.
So, thanks very much. I know we're all looking at these environmental factors, with government budgets, and I thought it would be helpful to really do a deep dive, and I'm sure we'll return to this topic as things evolve, but I think we've done a lot to safety net, if you will. So invite any questions or comments in the future, like that. Members of the authority as well about what we're doing and why we're doing it. So the next reports, I wonder if we could be relatively brief about them. I know they're of course very, very important, and the Senate in particular has done a great job. So
I'll just ask Bev for the investment report to speak again to this start. We expect to see how it is.
So, as we're all aware, the market conditions are unstable and the rates are continuing to decline. So if you see in the handout, the chart that we have given, you'd see in the out years, in the longer term maturities, our securities will still continue to yield 4 to 5%. Now, this is because we strategically placed instruments at a favorable condition when the market was favorable. We placed it at a certain level in the out years and the longer term maturities. So they are continuing to yield us 4 to 5% of securities, which is very rare to see in today's era. And we are continuing to do that. So now we recently placed securities in the February 2027, which is 3 years from now. And our next target is to place securities in the May 2027. So that's how our strategy goes on.
So we are finally at the point where the market dips. We will follow the market. There is no way for us to not follow the market without taking on extraordinary risk. But we will have enough, as Deb just said, higher paying instruments that are paying above the market that while certainly the amount of revenue will go down, it will not go down dramatically. So I'll leave that as the investment recap. If you could pull this chart up. And we focus on the sales tax first. So if you look at this chart, attachment C to the revenue report, yes, we're seeing a dip in sales tax. That was alarming. Last month, I told you I would only worry about sales tax if it dropped $10 million before the end of the fiscal year. Last month, it dropped 8. Okay. But you also have to look at how you look at your sales tax percentages. We are looking at annualized budget in our reports, and we've stuck with that method. Lou, who is relatively new, has really dug into our sales tax history. She's dug into our grantors tax history. She's done some stuff with grantors. It's just absolutely amazing. I'll talk about it a little bit. But we found that this time of year, going back approximately 15 years, about 75% of the time, you have what's called a bounce back. I don't know why. You see it in certain revenue sources, and that is you'll have a really powerful month, and then you'll have a really lousy month. Or you'll have a really lousy month, and you'll have a really powerful month. We had a lousy month. It's in the same window that this seems to always happen, 75% of the time of our history. We're hoping that this is in that 75%. But even if it's not, I don't think it's the end of the world because the portfolio is bailing it out. Look at the portfolio, not on this sheet. It did take a dip in February. That dip in February is because, very simply, there are less days in February. The portfolio at this point in time, essentially cash in the bank, money that you'll be able to spend, is $72 million. The estimate was 32 million. So I think we'll hit that 50 million. I'm really comfortable with that by the end of this week. Grantors tax, you can scroll down to that one. Lou has done a tremendous job pulling together some probability schedules and some estimating schedules, and she's brought a level of technical depth to us that is very much appreciated. Like sales tax, if a lot of people, this proved out in 2007, 2008, a lot of people lose their homes, grantors tax could bounce back. But let's be more positive about it. If the folks who have lost their jobs decide to retire and move to a sunshine state or something else, that may actually open up a more normal housing market for people to move up. And
Only the people who want to move up can afford the homes.
Yeah, that's true. But even if the home becomes more affordable, if there's enough of them changing over, our revenue picture won't be as dire. And the problem with estimating grantors in this environment is all of our backward-looking models, none of them, except for that little period in 07, 08, because again, recessions and problems like that don't confine themselves to our fiscal year. except for that, that's the only period that we really have a good statistical base on. So part of what we're doing, getting ready for our next year, is observation. If we start running numbers now, we are running numbers, but if we start running numbers and running them up the flagpole, all it's going to do is, create concern. I think we have enough backstop that primary job of the authority is to fund the projects it's committed to. I do not see that being at risk. We may not have as big a 2-year update as we have had in the past. We may not have as big a one as we would like to have, because before that money can go into any new projects, I would be advising you to make sure you've got enough money for the current approved projects.
Yeah, Mr. Tim, may I ask one question? Mr. Ongi, what you just said is absolutely correct, because my other smaller concern is that if localities, because when we give funding, we're not funding the entire project. And so if localities cannot find ways to fund new projects, they might just not do them at all. So then MBTA is not expending money, but it is, you're right, to fund what's already underway is much better than trying to fund new projects right now, because we are seeing counties all across the region, but absolutely even in Northern Virginia that are running, they're having a very hard time balancing their budget. And so I don't know, it is very possible that bridge that needs to be fixed, so that extension that needs to be built may just sit there for a couple of years longer until a locality feels like they can do that.
And if the worst picture comes to bear, today wasn't a good example. The Liberation Day, we have a kind of another example of Liberation Day where bond rates went up, so our return on our portfolio went up, and the equity market skyrocketed.
It did. Do you think that was because of the announcement from the UK?
That's the only thing out there
Yeah.
that could have driven it. Yes, the UK is the example of maybe how we can weather this.
Yeah, I thought, well, and I thought it was because the UK was something, right?
Well, it's not immaterial.
Right, yeah.
But the UK is one country. You've got to deal with the European Union.
Yeah.
Which, on the European side.
And
on the eastern
everybody
side,
else.
and China and Japan to deal with.
And there's still a 10% tariff on
And
everything
there's
coming
still-
in from the UK. And then 25% on cars except the first, 10,000 or 100,000, I forget what the.
And 10% on paper.
Remember, a 25% tariff, and not to undersell it, but a 25% tariff occurs at the wholesale level of a component on cars. So it doesn't mean a 25% increase on the price of the final product.
Yeah.
Still an increase.
But it's still an increase,
Yeah.
no doubt about that. I'm not trying to justify it, certainly not in this room.
I don't know, I'm sorry, I'm based,
Please
if
go
I
ahead.
could have a comment. I think that calling with today's announcement is showing that Trump is starting to retreat. And the Fed is not taking the action that Trump would like because they realize that tariffs are gonna hurt us. And I think Trump is hopefully, the administration starting to realize that they're gonna have a backtrack.
I was so pleased to see that the Fed stood firm on, because we talk about the Fed and a rate.
Yeah,
When they do this rate setting, they're actually talking about several rates. And they held their ground on, I think, with all this uncertainty, and they attributed it to the uncertainty over tariffs. Powell didn't even get into the politics of it.
You're talking about a normal president, and like, this is the mental health therapist part of me talking. You have a narcissist, they don't retreat.
Last report is the operating budget. We are 75% of the way through the year. We've only expended 60% of the budget, and we catch up when we pay some big expenses. The only negative line in there is for building furniture, furnishings and fixtures. And that will get resolved before the end of the fiscal year as we pull in some of the money from the landlord. And get reimbursed.
Right.
Any questions about the remaining of these reports? And Deb, thank you. Is there anything you'd like to say beyond what you said?
That was all.
Very much for the work. Yeah. Anybody have any questions? Anything you want to bring up?
Let's go home now.
Finance
To go home now. I'm in my bed. Put my covers over my head.
Go live in the basement or something. Yeah. Okay. Anybody have anything you want to bring up? Any commentary on? Questions? Yeah. Thanks very much. On entertaining motion to adjourn. Second. Those in favor, signify by saying aye. Opposed? We're adjourned. Thank you very much. The whole finance team, big thank you.
Good job. Good job.